Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing within a range, and heading into the open, how the market responds to the 79 quarter to 82 quarter zone is going to help us figure out which side is being more dominant on the day time frame. If we can get a successful breakout where the market breaks out but then holds above 79 quarter to 82 quarter, then that would be a short-term bullish signal, and that could lead to a retest of the 26.99.75 area and the 27.10 to 27.13 initial resistance zone, where responsive sellers could be active on first test. But then from there, if we are seeing continued upward momentum and strength across the board, we could even return to yesterday's high of 26.75 and test the resistance zone at 31 quarter to 34 quarter, where sellers could step in yet again. On the downside, in the event of a failed breakout of 79 quarter to 82 quarter, we could quite easily return back down into the gap fill at 68 quarter. We have yesterday's RTH low at 67 and yesterday's overnight low at 60.5. Those are just some reference levels to keep in mind. And then we have the pre-market support zone at 53.5 to 57. That is technically a spot where buyers could defend, but keep in mind that it's not really a major area of support. And if we're heading down on broad market weakness and sustained downside momentum, then given that the bigger picture bias is already bearish, it could lead to a break of that zone and test of the overnight low at 45 quarter. A break and hold below the pre-market support zone would signal short-term weakness, and that would be in alignment with the bigger picture bearish bias, so that can lead to a move easily down into 45 quarter and even lower. Now, in the event that the market does go into another liquidation phase, we need to be careful at the 35 to 38 initial support zone, because again, it's not really a major area of support. In the event of a breakdown, the next decent area of support is down at 1575 to 1875, and buyers could be active at 2375 to 2575. So right now the market seems to be stabilizing a bit, but that bigger picture pattern is still bearish, so we still need to be pretty nimble with our short-term or intraday bias, and that's why the short-term bias continues to be neutral, and that means that we have to assess the situation in real time and see which side is being more dominant on the day time frame. And how the market responds to the 79 quarter to 82 quarter zone is going to help us figure that out. Now, if yesterday's price action is any indication, it seems like that crazy volatility of 100 plus point ranges might be out of the way now. So if we do get a downside move, we could stabilize at the 1575 to 1875 support. In the event that we start to see heavy liquidation again and we get a break below 1575 to 1875, then we have the February 6th RTH low at 25.89, the 80 quarter HVN, and the support zone at 72.75 to 75 quarter. So short term, even if we do get a breakdown move, if we can hold above 1575 to 1875, the market can still balance and stabilize. But if we put in yet another breakdown below 1575 to 1875, then we don't really have any decent support underneath 1575 until the 80 quarter HVN and the 72.75 to 75 quarter area. On the upside, a break above 31 quarter to 34 quarter could eventually lead to a test of 61 to 63. So at the moment, the market seems to be in a balancing phase, but the bigger picture bias continues to be bearish, and that means anytime the market gets overextended into a decent area of resistance, we can still see a response there on the day time frame. So on the upside, 27.10 to 13 would be a upside objective above the micro bull bear zone, but if we get exhausted into 31 quarter, 34 quarter, that is still a decent area of resistance, and then beyond that, we have some resistance levels at 43 quarter, 50, 56 half, but the next major zone would be at 61 to 63. So those are the main ideas heading into the open. Let's see how the market responds to the 79 quarter to 82 quarter micro bull bear zone, and we'll take it from there.